Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. This is our forex technical analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. Before we pull up our video, we always want to start off our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As we said, this is our forex technical analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. In each video, we look at the prior session's price action to come up with key support and resistance price levels. We'll review the gold chart to come up with leading sentiment. We'll try to create a low volatility and inside bar watch list, and we have an education spotlight at the end. Please send your feedback and comments to contact@dmbfx.com, and let's head to the charts. Okay, so now we're going to look at some of our market sentiment leaders to see how they're helping us gauge the market, starting off with the dollar. When we look at the dollar, I mean, we could see we kind of, and I know I have a very zoomed out look here because I wanted you to see where I'm grabbing this from as far as this resistance line. But we can see that the market over the past week here really shot up here, and of course, you know, with the instability of the euro, the FOMC, even though they kept their rate unchanged, they had some positive commentary about the economy with moderate growth, and so we really got that big move here for our Monday and Tuesday, and then we hit again that resistance level that we pulled off from way back. Now we pulled off back just a little bit. Now we can see on our market profile that if we get below 80.50, right around 80.50, I mean it's really possible for us to come all the way back down to 79. Which will be should hold up as support, as that's our price level from before. So again, we need to watch 80.50 to see if we'll begin to start to fall right out of there. But overall, I mean, again, very strong dollar. Dollar very strong. We'll see what happens from here. So if we have a strong dollar, let's take a look at gold. And just looking at this visually, we can see one very key important thing. When's the last time gold was below the 200 moving average? Not sure when the last time is, but we do know that it is right now. We also could make an argument for an M pattern. We're certainly putting a lower high here, putting a lower high here, and once we finally broke through 1600, we really started to test some things out here. Now we've got this wick here down here at 1534. That's something to watch, and of course this swing low here is all the way down at 1485. So those are some price levels to watch. And of course, where we are right now, if we can get above these wicks, and more importantly, the 200 moving average, we may get ourselves back into this range. But right now, it is very important to see that we actually did close below the 200 moving average for gold. At some point, gold is definitely going to be buyable. Finishing off with crude oil. We've been talking about this range of 102 down to 96 for a while, and then what's important about what happened right now is you see we closed below 96, so now we have to start watching 90. If we get below Friday's low, we have to start looking at the fact that it may go back down and retest. Okay, as usual, we're going to start off with the daily chart. Here we are looking at the euro dollar. And what's interesting about this, of course, is that we broke through the October lows. We broke through pretty decidedly. You know, this wasn't just like a little poke through. We broke through, and we're holding below. So now this may be resistance. We're certainly well off our 20 moving average, so that also might see that we might need a breather. And of course, this is all based on all of the instability going on right now with the euro. Now, come over here to the weekly just to show you one thing. I want you to kind of see that where there are some potential targets if we continue to go lower. If I draw in my bring in our horizontal line, we can see the wick where it is right now matches up with the what does that say down there? January lows of 2011 here. So that looks like it's a potential bounce place. This, once again, the price level here is 1.286. So that's certainly a place to watch if the market wants to continue to go lower. Switch back to the daily. Come over here to the 1 hour time frame, and clearly we're in a buy zone. We are well below our long-term moving average. We did break above our short-term moving average, which may mean we may make a break higher, but we are in the buy zone. We've made our bounce and kind of consolidated sideways, although there's a slight move upward here. Ever so slightly, the euro is in control, which would allow for, and right here where you see where we had that little divergence where we got that little spike. However, we're basically just at our long-term moving average here on the euro as it's trending lower, while our dollar ever so slightly is trending higher, but it's also just below its long-term moving average, and our indicators in the neutral zone. So basically, we're in the buy zone. We are in a place where buyers found value in the past, again going back to the weekly and looking at the January lows. So we may consolidate here, and again, as we always say, what's our catalyst? What's going to move us? What's going to move the euro? What's going to move the dollar? We had the FOMC policy statement this week. The dollar strengthened a little bit off of that, but again, the stability of the euro is definitely in question. Switching over to the pound dollar, and one thing we'll see here with the pound dollar as we look at it is that we never really broke through our October lows. That's where we found support, where again with the euro we did break through those October lows. Switch back. So I mean, I guess that's a little more positive there for the pound. Certainly, if you wanted to, you could come in here. We now have a swing low here, a swing low here, some swing lows here. So we now see that there's values for buyers here at this 1.54 price level. Excuse me, I have a little quote here. So there's definitely some buyers here, but again, what's our catalyst? We are in the neutral zone now, still below our long-term moving average. We have the dollar and the pound converging here. If the dollar takes control, we'll see a continuation of this move higher. However, we're really moving sideways on the pound, ever so fractionally above the long-term moving average. As we already said, the dollar is below our long-term moving average. Our indicators in the neutral zone. So it's going to be interesting to see what happens here at the 20 moving average. But again, we know that our buyers are finding value here at 1.54. So that's a place to look for a little bit of a longer-term move upwards. Finishing off with the dollar franc. We've made our move higher here, and now we're pulling back. So there's 0.95. Let's zoom out and see if we see anything coming on over here. We'll get our crosshairs, and right here there's 0.95. So these wicks in here match up pretty well with that. So let's go ahead and draw that in, and go back to our daily, and you kind of see again why we failed there. That's not perfect science, but again, I draw them because they have value, they have meaning, and they're only of meaning if they're honored. You know, again, look at here, here. So now, you know, we have to watch this 9.95 to 0.955 range to see what happens. But we're pulling back to the 20 moving average. The 20 moving average has been a buying spot in the past off of the daily. We'll certainly have to see what happens here. We are now in a neutral zone after a beautiful move up and being in the sell zone. We're now in a neutral zone, still above our long-term moving average. The franc, however, took control. You see where we had this divergence is where we had this big move down, and with the franc in control, we can see price action move, and we'll see this. What was honored here in the daily as good resistance, will it now honored as support? Be honored as support. The franc is above its long-term moving average, dollar is below its long-term moving average, and our indicator has moved sideways. As we come to today's watch list, we're first starting off with our low volatility watch list, which is our 1 hour time frame using Bollinger Bands. We're looking for consolidation, we're looking for a Bollinger Band squeeze, and we do have a couple. We've got the euro dollar and the Aussie dollar. And in addition, we have the dollar freight. Now, the dollar freight set up on Friday, and it looks like it's already a Bollinger Band breakout to the downside. So we may be just a little bit too late on that one, but those are the consolidation breakout plays we're watching. As far as the inside bar, we don't have any candidates. As we come to our education spotlight, we spend a lot of time talking about trading systems, trading rules, trading routines, trading schedule, and today we're talking about a trading journal. And the main thing we want to say here, and this is a consistent theme here for us as a part of our videos, is the importance of documentation. And the main reason we want to go ahead and document is so that we learn from our past. You are costing yourself money if you continue to make the same mistakes. When you make miscues like not following your system, your routines, your rules, or misreading an indicator that costs you money once, you should learn from that as like Pavlov and not make that same statement again. You're costing yourself money. So the way that we learn from that is by documentation. In addition, we know that we want to have positive expectancy. We want to know that our system works and that over a period of time, a sample of trades will have more wins and losses and we'll have a profitable trading system. By documenting, we can begin to start to notice when the market conditions changes that our rules, our setups are working, and it's time to make adjustments. But we can only do that when we document time of day, again, the actual entry and the setup that we're looking at, so we can see whether or not these things are still working. We've got some great things planned for you in 2012, so we want to make sure that you are going to subscribe, comment, or like our channel so that you can be a part of that. On Facebook, we have a page, Are You Financial Literate? And Twitter and YouTube, we're moving with Mike. We're going to have some really great things, some new channels, some new information, so that each day we're giving you the best information you need to be a successful trader. We still have our free 5-part video course on high probability trading. It gives you an insight to what you should have as you frame the market and come up with your own rules. We hope that gives you a gauge into who we are as coaches and how we can help you one-on-one develop that trading mindset to implement your trading system and your trading rules day after day after day. If you're going to trade Forex, why not get paid to trade? This is simply getting rebates for your trades. Doesn't change the spread, doesn't change the conditions. And if you're looking for signals, we have those too. Get the signals and trade them yourself, or get the signals and have them traded automatically. But again, it's not about the system or an indicator as much as it is the psychological capital that you have to pull the trigger on each trade. You need to develop a trader's mindset, and we can help you do that. Thanks, guys, and I'll see you next time.